Getting a mortgage can be overwhelming and stressful, especially for self-employed people, but it doesn't have to be. In this video, I'm going to break down the entire process and give you the step-by-step roadmap that you need to successfully get a mortgage loan approved. Hi everyone, my name's Megan, and I'm a mortgage consultant and a real estate investor with 15 years of experience helping self-employed homebuyers tap into their biggest asset, their house, a property. I understand the unique challenges that come with financing a home as an entrepreneur or a freelancer. So in this video, I'm going to equip you with all the inside tips and tricks to make sure you get the best deal when applying for your loan and that you can relax knowing it's going to get approved. So let's get started. Who is considered a self-employed person? It can be really confusing being self-employed. Most likely your accountant or your attorney gave you instructions on how to pay yourself. Self-employed individuals are those who work for themselves or own a business. They're responsible for managing their own finances, paying their own taxes, and keeping track of your own earnings. The income that you can receive is often in the form of 1099 income, which is paid to you directly from clients or customers. But there's also categorizations, like I can be a sole proprietor, which is where you get 1099 income that goes on a Schedule C. Then you have partnerships. Your income can come in the form of guaranteed payments that isn't taxed or income from your business. Then if you own an S corporation, you have to be paid a W-2, and then you get profit distributions as 1099 income. If you own a C corporation, you can receive a W-2, and then any profit you receive is what's called a dividend. So that's why it gets so confusing. You may also receive income from multiple sources, such as rental income, from investments or a business you run. We do have videos on these other topics, just like the one that you can watch by clicking on the card at the end of this video. But when reporting your earnings to the IRS, self-employed individuals, we can deduct expenses, we can claim tax credits for business operations. There are thousands of pages of the IRS tax code, and you should use them to your advantage for all the risks that you take on, but it's why it's also important to then have a strategy for when you're buying a home and to talk to the right person. Being self-employed requires discipline, but can also provide freedom, flexibility in terms of work hours and how much money you can make. And so it's really important that the same things that you use as an advantage don't come up as a disadvantage when you want to buy your dream home. So when securing a mortgage, when you're self-employed, it can be really overwhelming because you don't understand. You get money, so why is it that you're having a hard time? And that's because as a self-employed individual, the bank sees your income is unpredictable, which means you're a higher risk when they're deciding on approving a loan. Those of us who are self-employed have income that can fluctuate, and it makes it challenging for underwriters to determine what you really make and what's going to happen going forward. When we're self-employed, we also usually maximize our deductions, which reduces our taxable income. And while this is beneficial for us, it does inadvertently lower our reported income, leading to lower qualifications when you're going to buy a house. Lenders also consider the stability of your self-employed status. So if you've been self-employed for less than 2 years, lenders can see this as really risky. For self-employed people who have complex financial situations with multiple businesses and income streams, it makes the loan process much more complicated if you're getting a conventional or FHA loan. However, there are options which are called non-QM loans. You may have heard of them if you've heard of them called bank statement loans for self-employed individuals, which address some of these challenges, and they provide more flexible ways to determine your income. So the main types of loans, let's talk about which ones you could qualify for if you're self-employed. And so to help you understand them first, just from a high level looking in, there are two groups of mortgages. You've got your conforming loans, like I just mentioned, conventional, FHA, VA. And although this video is about the challenges you face being self-employed, there are self-employed borrowers that do qualify for conforming loans. If you can't qualify for a conforming loan, and the reason would be that there isn't enough income to cover your debts, then that is when you want to go over and look at the second group, which are called portfolio loans or non-QM, non-qualified mortgages. And these are the second group, And there's a handful of them. And these portfolio non-QM loans, such as the bank statement program and the 1099 program, offer an alternative way to document and prove your income. Now, they do require a slightly higher down payment, so maybe 10 to 20% down versus 5% down. The documents you'll need in order to be approved are going to be less, which is a lot easier when you're self-employed. And the documents you're going to need to provide will differ depending on which of these two groups of loans you end up falling into. Now, I typically will always ask a buyer to give me their tax returns, even though I don't need them on a bank statement loan, because I want to determine where you fit. And I want to do that so that you get the best options, because if you went to someone who doesn't know how to read tax returns, they may say you're not qualified for this, and you deserve to know which bucket you fall into and how much paperwork and homework you want to do when you're going through the mortgage process. Now, unfortunately, there are more times than I like to count where a lender has told a self-employed client that they could not get a mortgage, and then I get my hands on their tax returns and I'm able to offer them a conforming loan option. Now, some people who have already gone through the process or who have had a lot of businesses, they don't want to go through a conforming loan. So they differ and they decide, I just want to go for a non-QM loan because it's easier on me. So if you are doing one of these non-QM loans, you will not need tax returns for 2 years with all schedules and pages like you do on a conforming loan. If you're working with my team, you're going to get asked for them anyway. So you're going to need tax returns for 2 years with all schedules and pages on a conforming loan, but not on the non-QM. You're going to need a P&L from the last time you had a tax return filed till when you're getting a loan. You're going to need 2 months of bank statements. And if you have any business expenses that you pay for personally, make sure to tell your loan officer, because we can omit that debt payment if you can show proof that the business has paid for it for 12 months. Where the hard part comes in is once your loan is approved. The additional things that are asked, which are called conditions, can be really extensive and daunting and annoying when you go through a conforming loan. When I did my own mortgage, I did a conforming loan a number of years ago, and I had to get statements of cash flow and long-term and short-term debt agreements and go to my bank, a loan that the business had. I don't think I will ever do a conforming loan again as a self-employed borrower who has multiple businesses. If you choose to or only have the option of a non-QM loan, here's where the documentation will be a little bit different. You will need instead things such as 12 months of business bank statements, even up to 24 months of business bank statements, 2 months of your personal bank statements, but no tax returns required. You're probably going to need a letter from your CPA stating information about the business. You'll have to provide your driver's license. A lot of times your certificate of organization or your EIN letter from the IRS, and usually the underwriter will ask for other letters of explanation or proof of something along the way. So make sure to ask your loan officer to go over all the options you qualify for so you can make the best decision for you and your situation. Now, the qualifications of getting approved for a self-employed loan are important to understand as well. The last part of this video is about qualifying for a self-employed loan, but I want to make sure you understand how it works. So self-employed home buyers and real estate buyers need a minimum, almost always, of a 2-year history of owning a business to qualify for a mortgage. All of these loan programs use what's called the ability to repay rule, and they consider what is your taxable income or what does bank statement show, and that's how banks can approve you all different ways, is making sure you have the ability to repay. Bank statement programs determine their income based off of the deposits in your bank accounts with some other calculation, while 1099 programs take all of your 1099s for either a 1-year or a 2-year time period, and they average the amounts that are on your 1099s. Now, these portfolio non-QM loans typically have higher interest rates, and you do usually have to have decent credit, somewhere in the mid-600s, which means your mortgage payment will be a little higher than if you do a conforming loan. One of my best pieces of advice for you on this information and interest rates is to not get caught up in what the interest rate is and that it's higher than a conforming loan. So the reason for not getting too caught up in the interest rate is this. If you report $30,000 less in income on your tax return, this means that you're going to be paying roughly $6,000 to $10,000 less in federal and self-employed income taxes. The interest rate is going to cost you just a few $1,000s more during the same time frame, one period, 1 year. So take the write-offs in exchange for a slightly higher interest rate and payment. Don't try to report more income and pay more taxes to save less in interest. Who are the best self-employed mortgage lenders? So when you're looking for a loan officer in a mortgage company or a mortgage broker, when you're self-employed, it's crucial to work with a lender or broker who is well-versed in the unique challenges and requirements that come with your situation being self-employed. And a skilled mortgage broker like Collab Lending is an excellent option because we have so many self-employed individuals. When you have an extensive background and a track record of success in supporting self-employed home buyers, it really helps provide a personalized service that takes the stress off of you when you're trying to purchase your dream home. The team that we have is dedicated and well-trained in handling both conforming and non-QM loans, and we have a really deep understanding of bank statement loans for self-employed borrowers, and it makes sure that you get through that process getting approved and get your house at the end of it. And even if you don't use Collab Lending, choosing a mortgage broker is where you're going to have the best success. It is very natural to want to go to the bank who has your business bank accounts and personal, but unfortunately, you're setting yourself up for a lot of frustration. My last tip on this topic is one that I personally live by with all the professionals that I work with. So if you're self-employed, work with service providers that are self-employed themselves. As an example, if you invest in real estate, work with a real estate investor when you're choosing your real estate agent, a financial advisor, and other advisors that are investors. They will respect your situation and decisions more when they have walked in your shoes and typically will have researched or experienced the solution that you're looking for right now. Now, for all of you that are investors in real estate, stocks, or have alternative income types that I didn't talk about in this video, make sure you go to our non-QM playlist on this channel and check out the videos on the DSCR loans or the asset depletion loans. These options are game changers that were not around 5 and 6 years ago. And the final tip and piece of advice before wrapping up, I want to share my best tip, which includes the importance of not getting fixated too much on the interest rate and working with a service provider who understands or is self-employed themselves. Trust me, it makes a world of difference. So choosing the right lender is crucial. I recommend working with someone on our team at Collab Lending who specializes in self-employed home buyers, because remember, your mortgage broker will play a pivotal role in you getting the house of your dreams. Now that you're armed with knowledge, you can go and start exploring more of the videos that we have on our channel and are going to continue to post. So if you're ready to take the next step, click the link in the description to connect with one of our team members and discuss how we can help you, because even if we can't, we know other brokers who can. So don't just dream about it, let's make it happen together.